It's a big, noisy universe of stocks out there. Welcome to Goodbye or Goodbye. Our goal to help cut through that noise to navigate the best moves for your portfolio. Today we're hitting on the low and high notes of music companies. I'm here with Barbara Doran, BD8 Capital Partners CEO and CIO. Thanks for being here. So let's talk about some music companies. One of my favorite topics actually is to talk about music, so I'm happy to do so. Universal Music Group is the stock that you would be looking at a potential buy. The stock's done pretty well over the past year. Trades in Europe, it's up about 33% or so over the past year. So let's talk about why you like it. Streaming growing and pricing for streaming is getting better for the artists that this company manages.
Yeah, it's been a big sea change in the last 18 months or so, really driven by names like Spotify, a stock that's up 100%. And it takes in just a little bit of history about the music business. You know, when I guess in the first 15 years of 2001 to 14. The sales dropped dramatically, and that was because digital media, came into being, and people did not want to buy the physical records. So it went from 23 billion to 14 billion. Then streaming started to catch on, and so it's now back up to 27 billion. So you've had a big sea change, and the sea change is paying. It's become much more what they're calling artist-centric. That you are now paying every time I download a song, I am paying that artist, and that is through the big music, studios. And that is the big three are Universal, Sony, and Warner. And so it's a very interesting time because they're really seeing their revenues come up with a decent amount of their revenues from the streaming services.
And it's also interesting because Universal had an agreement with TikTok, lost the agreement with TikTok, but the last earnings report actually looked pretty decent. As you say, this is one of the big three, and it's actually the biggest of the big three, I believe.
Yes.
With its market share.
Right, it is. They've got about almost 30% of share. Sony is number two with about 19%, and you have Warner bringing up somewhere between 14 and 15%. And in this business, that's a big difference because usually when they're talking market share, they're talking about the catalog, right? The catalog is the millions and millions of songs that they have, and it's an advantage to have that kind of scale. Because an interesting thing that's happening with streaming is all these sort of the iconic names of the past, are becoming even more popular, and you're seeing more downloads. In fact, there was an interesting stat, the UK market. 8 years ago, 53% of downloads were this iconic golden oldies type of thing. Now it's up to 77%.
Wow.
So yeah, and the thinking is that it's probably not only the older generation figuring out how to stream, but it's also younger generation who never heard these songs, and a lot of it's great music. So you're seeing the streaming and you're seeing something like Spotify, who's being very aggressive in building their business, and they're seeing something like 19-20% more active monthly users every month. That's big. They've got about almost 750 million listeners, about 250 million that are subscribers, and that money flows directly to all of them.
Yeah, and as you say, also, it's not just how many artists they have, it's who they have, right? And we actually have a graphic, I believe, of some of the Universal Music Group art. I mean, Taylor Swift won with a bullet there, right? Like that's the one. That's obviously she's been dominant. But they also have legacy artists like Sting, Bad Bunny, Sabrina Carpenter, who's been hot this summer, Kendrick Lamar. Warner, on the other hand, which we're going to talk about in a minute, it has some big artists, but in terms of the depth and breadth.
Well, that's it. Because what happens when you have all the big names, it makes it much easier to recruit new names, right? When you're Warner and you're sort of in third place, you've got to offer more. You usually can't give as good royalty deals, to this place. You don't have as much capital. And so when you've got the scale and you've got the global infrastructure, offices everywhere, it really makes a difference. And you're seeing that. Universal's gaining share in just about every category.
Well, as you know, we have to talk about what are potential risks here. And I guess the potential risk here is that a subscription service like a Spotify will be able to continue that momentum.
Exactly, because the thinking right now, when analysts are really doing their projections, there's only about 15% penetration in smartphones worldwide in terms of streaming music. So the thought is that will grow. So you've got not only the growing subscriber base, but the players like Universal who have deep, benches both in the iconic sort of music, but also these big stars. Because apparently 2%, of the stars, is what's played for 95% of the time.
Right.
So it's huge.
That makes sense.
Yeah, it does.
So we already teased it, but let's talk about the company that you think is not as good a buy, and that is Warner Music Group. The shares are up over the past year, about 9%, so they've really lagged. So let's talk about it. Smaller, first of all. You talked about scale important. They don't have the same quantity.
No,
of
they
scale.
don't. And I'll tell you where that starts with, not only in your recruiting and finding the top artists, because you'll say, oh my God, who Taylor Swift, I want to have the people who have the ability to promote me and get me out there. So that hurts. Plus, it's also technology and AI. You've got to spend a lot. There's lots of things going on. They won't have those kinds of resources. And also when they negotiate their royalties with artists, it's usually they have to give more, to say, well, look, don't go with this player. We'll give you better pricing.
And also there's as you said before, talent sort of begets talent, and I guess the opposite can be true.
Yeah, that's really it. And I think that's why you see for the disparity in the stock performance between Universal and them, because Universal has much higher growth. They have a great management team, and they know how to do it. And this, it's been erratic, in their execution. And I think it's really a function of their size and scale.
And I think the third one we kind of already alluded to, the pricing pressure, that they have to,
it's pricing pressure,
more to
right?
attract
Not
artists.
only on that, but it's also, in terms of streaming and all that sort of thing. So we will see, what happens there.
Now, what could go right for Warner? The streaming business numbers could continue perhaps to improve.
Yeah, and also what's interesting is that gaining share in terms of their deep, music base, from the past. And so, you mentioned Sting. Names like that, it's like the riches that keep giving. It's also higher margin business because it's already sunk costs. They've already paid for those artists way back when to get them where they are. So the more it goes to the deeper in their catalog, the more higher margin business and the more visibility. Because you can have years of visibility knowing what you have in your catalog.
What we call the legacy artist, sadly.
Yes.
Okay, so you are telling folks buy Universal, avoid Warner Music. You don't hold either of these in your portfolio?
No, I don't hold them, and I wouldn't say. I want to make clear, Warner is not a short. Because a rising tide. They will be helped by all these, industry. Forces that are happening. But again, as you mentioned, they have really underperformed. This stock has been up 3 times what Warner was in the last year, and year to date, Warner is down. And I think this deserves a premium valuation. It will maintain that. And the only reason I think people would buy Warner because they think, okay, it's down and dirty, it's discounted,
right.
But I think it will always be discounted to Universal.
All right, Barbara, thanks a lot. Really appreciate it. And thank you so much for watching Goodbye or Goodbye. We'll be bringing you new episodes at 3:30 p.m. Eastern.